I'm going to be here with you guys for about 30, 35 minutes because I got another appointment, so I'm sorry for making this a little tight. But this is going to be a very interesting and very unique FX treat, in my opinion, because we're going to share with you some of the latest research we've done at BK, and I'll share with you a strategy that we're trading now. I'll give you some of the rules and some of the parameters. And while I'm talking, I'm sending you this link to everybody, and I'll send it again before the end of the session. This is a link $27, but it will be up only for 24 hours. It's already, the strategy is already off the web. Everybody who wanted already bought it. I just made a special arrangement for 24 hours so that everybody who's in this FX Treat webinar who has not had a chance to, to get a hold of the strategy can buy it. It has the full strategy, the full course, and the MT4 on it. But I'm going to talk a little bit about what it's about, what the thought pattern was for how we developed it, and why I think you'll find it a very interesting, very valuable trade for you guys to consider part of your day-to-day trading in the FX market. So first of all, my name is Boris Schlossberg. Those of you who don't know me, I'm the founding partner of BK Forex, along with my partner Kathy Lean. We cover the Forex market pretty much 24 hours a day, 5 days a week. I primarily covered the European session, and of course, you probably read some of my daily notes on FX Street, and also probably some of you follow me on Twitter at FX Flow. And if you don't follow me on Twitter, feel free to sign up at FX Flow. Here, I'll send you my. That's absolutely free, and you can follow me if you like. Okay, so. Today's topic of conversation, and before I do this, let me just, okay, so those of you who've traded for more than a week at this point, I'm sure, certainly those of you who've traded for more than a year, can appreciate the fact that anytime you're involved in a speculative trade, anytime you're in a speculative market like FX, nothing really is foolproof. No strategy, especially no technical strategy, works. And as a matter of fact, all technical strategies fail miserably if you come in front of unexpected news, or just generally news that is, let's say, was planned, but comes out completely opposite of what the market thinks. I'm sure many of you are going to tell me, well, all I have to do is trade support and resistance. They're called support and resistance for a point, because those are points that are easily broken through or held in key cases, but it has nothing to do with the technical aspect of it being whole. They're held or broken based upon the news flow that happens in the marketplace. The bottom line is, the reason why FX is so hard to trade, and those of you who've been in webinars with me know that you're going to get sirens in New York City all the time, so just bear with us on the noise. The reason why you get movements on a chart has very little to do with technicals. Occasionally it does. Like, I'll give you an example. Let's say, if a pattern breaks a very, very big number, like 105 in yen, or 140 in euro. Yes, price itself is a fundamental input, because people who buy euros in big size, like reserve managers for central banks, like big corporate treasury finance executives, all those people really care about are big prices. So yes, price can be an input in and can move prices. But those are very rare and few and far between points of what really moves price. What really moves price virtually almost all the time is news flow, and it's either expected or unexpected news flow. And that's what screws up your trades. You could be in a trade beautifully holding a 100-point position, then some central banker comes out and says something, and boom, you're 100 points to the negative. And it doesn't matter what kind of Fibonacci retracement you had. It's all going to get blown to smithereens. So, my point is that anybody who looks at the market strictly from a technical point of view is blind. Is really looking at it with one eye and a very bad eye at that on that point. You really don't understand what you're doing, and that's why almost everybody who trades technically doesn't make any money because you are missing the key component of what really moves markets, which is fundamentals, right? But fundamentals are impossible to predict. They're impossible to predict. Don't even think that you can be accurate in predicting fundamentals. Wall Street has thousands of very, very intelligent, very well-paid people. And one of the key examples I used to always love to give is that non-farm payrolls, the single most watched event in the U.S. calendar. I did a study on it a while back just to see, how accurate were the predictions. And I gave myself 20,000 up and down. So I gave myself a margin of error of 20,000 up and down of what the Wall Street consensus was. And out of 20 events, 20 months of non-farm payrolls, 16 times the consensus was off by more than 20,000. So if those people with very, very complex algorithms and econometric models couldn't even come close to forecasting it, you can't eat it. There's just too many variables and fundamentals that are really, really hard to forecast. So trying to think that you can forecast fundamentals is very hard. But what can be done is possibly reacting intelligently to fundamentals, right? Reacting intelligently to fundamentals. So in its core essence, the Ajax strategy is basically a strategy that tries to create a logical structure of how to react to news. And it has a whole bunch of rules, which I'm going to go through with you in just a second, and overlays that structure on what I call meaningful news events. And in order for you guys to really find out what the meaningful news events are, I'm not going to go through it here. You're welcome to buy the course for $27. As I said, you have 24 hours to do it. That's it. After that, it disappears. And we'll be happy to give you all the information there. But I'll go through a couple of what are considered to be meaningful news events as just examples of how the traders works. But first and foremost, let me just show you. And I'm warning you right now, the rules are very complicated. This recording is going to be this webinar is going to be recorded, so you feel free to watch it. But if you really want to know the rules, you're obviously going to have to get the course from us because the rules are probably going to be too complicated for you to understand on the first time. And the reason why they're complicated is because if you want to have a good strategy, it can't be simple. If you had a simple strategy that worked, everybody would be a billion. What we do at Ajax is actually try to eliminate as many trades as possible. Now, I'm just trying to find. Last week was absolutely just obviously horrendously quiet week, right? I'm just trying to find. Just bear with me. Okay, let's go to FX. Street, I think it's calendar, right? I just want to use FX Street's calendar because obviously they're kind enough to, oops. Here's economic calendar, all right. I just want to go back last week. So 14, no, start date 14 and end date 18. Okay, let's see. Last week was obviously a very, very quiet week. I just want to pick out the right event last week that I can give you an example of the So, okay, last week basically ended on Thursday. No, you know what? I'm going to choose something quite interesting. Okay, we're going to choose something unusual. I'm going to choose the Bank of Canada interest rate decision, which was last week, and it was you know, and that's obviously it's a very, very meaningful event. Anything that's on the FXG calendar that has like 3 exclamation points is a pretty serious, possibly tradable event, right? So let's run and see how would we have traded the Bank of Canada event. And remember, the whole idea of and that would be on the 16th of August. Right. This is perfect, right? So the central bank announcement, Bank of Canada event, last Wednesday, the 16th of August. I'm going to show you this event, and I'm going to show you the rules of how we trade Ajax. It was a 10 o'clock New York. Everything in my chart here is in New York time. So this is New York time event. As you can see, the 10:05, the 10:05 bar. Let's just make it 10 o'clock because that's, you know, the event started at 10 o'clock, right? Okay, so the first thing that we do is we demarcate the event, which starts at 10 o'clock New York time, right? And then we're looking to see if the event itself, and this is my data window, so you could actually see the data window. And this is a 5-minute chart, 5-minute simple chart. And it has only one indicator on it, which is RSI. And we're going to use RSI to help us time the entry of our trade, right? Effectively, what we're doing in a big philosophical sense is we have created a system that tries to trade event risk on a retrace. On a retrace. In other words, there's event risk, there's a reaction to that risk, then there's a retrace, and we're going to try and enter it into the trade when the flow turns again in the direction of that event risk, right? So here's the event risk at 10 o'clock on Wednesday morning. The Bank of Canada comes out, and it kind of sounds dovish. It kind of says, you know what, nothing in the economy is really going as well as we think. We're not at all opposed to, we definitely think the currency is a little too high, the Canadian dollar is too high, and we're not completely opposed to, you know, maybe cutting rates down the road. All of this is negative Canadian dollar, so dollar CAD spikes up. And the first rule of Ajax is to see if we can get a reading in the RSI of 70 or above or 30 or below. That means we're looking for extreme readings within the first 15 minutes of the event. So in this particular case, the RSI hits 71 right away in the first 5 minutes, right? Then the next thing we see is after it hits 70 or higher, we'd like to see the RSI come back down below 64. So momentum goes up, then momentum finds a little bit of a pause, and it comes back down below 64. In this particular case, this was a really good example because everything happened within 5 minutes. Sometimes it takes hours for this to develop. But anyways, in this particular case, everything happens within 5 minutes. So first 5 minutes, it goes up 70. The next 5 minutes, it drops below 64. As you can see, it's 58 on the candle, right? And then the next candle, which is a 15-minute candle, right? It goes back up above 64. And our trigger point to the buy side is 64 or higher. So it drops below 64 and then it comes back up above 64. That tells us momentum has returned. We want to go and buy this particular price point because it means that there is continuity of the fundamental news, right? And the way we trade this is with a 20-point stop and a 10-point target. So we would have entered here at 110.007. Our stop would have been 109.87, 20-point stop. And our target would have been 110.117. So we're coming in, you know, we get a little bit of a retrace. We have about a 10-point retrace against us, right? We suffer a little bit of a drawdown. But then within about 35 minutes, right, or 25 minutes, the price goes all the way up to 110.24. Our target is 110.17. So boom, we make the target. We made this trade, right? Now, what's cool about Ajax, and this is a very, again, I'm only giving you probably about 20% of the rules. And if you want to know all the rules and all the key details, you're going to have to buy the course because it's very complicated. I don't have the time to go through all the the key components of how to trade. But what is cool about this is that the Ajax strategy works not just on the particular major of the event, but it can work across the whole complex of that particular currency. So this is a Canadian dollar. It's a Canadian event risk. And the whole Canadian complex, which is Euro CAD, Aussie CAD, Kiwi CAD, Pound CAD, is open to the possibility of a trade in this particular manner. So let's take a look and just look at a couple of other CAD currency pairs during this time frame to see if there was any additional trades, besides this one. So here's Aussie CAD, right? Okay. So here's Aussie CAD, which is another part of this, Australian CAD complex, right? And again, this is positive news. It's negative news to the Canadian dollar, obviously making the Aussie CAD go up. So here's Aussie CAD. The first 5 minutes, the RSI goes to 74. Then it drops down to 60, right, below 64. Then it comes back up above 64, which is above 65. Again, it gives us a buy trigger right over here, 50 minutes afterwards, at 103.04. Our stop is, again, 20 points, which would be 102.84, and our target is 103.14. Boom. It makes target right over here about 13, 40 minutes forward. Now, many of you are going to say, well, how come your stop and targets are 2-to-1 negative? That's a very negative risk-reward ratio. It is a negative risk-reward ratio. Well, because the way the setup is structured, it's a high probability setup. Particularly when we trade it on very, very, what we call high volatility important events. And in our back tests against those big, high volatility important events, our accuracy rates have ranged anywhere from 81% to as high as 91% over a period of 2 to 3 years. Now, of course, past performance is not indicative of future results. And of course, everything can go wrong. And of course, you yourself certainly have the option, both in the MT4 algo, which we provided in your own version of how you want to trade this, to change the parameters to maybe 1-to-1, or maybe trade 15 stop, 10 target, whatever you like. You can do this. But in the backtesting that we've done, because we've had good quality accuracy success, we're comfortable trading this on a 2-to-1 basis because we're confident that we have a reasonable chance of being 80% accurate in this particular setup, of course, knowing that past performance is not indicative of future results. But as you can see, here's 2 out of the Canadian complexes, and both of them, definitely work. So let me take a look at another, Canadian complex possible trade. And I actually have no idea what this one did because I haven't even looked at this. This is EuroCAD, right? So let's take a look at EuroCAD. How would EuroCAD perform in this particular environment? So this is interesting, actually. This is interesting because very, very interesting because I'm going to show you another wrinkle, another aspect of excuse me, of Ajax. And again, to get the full rules and to fully appreciate its power and its ability to accurately trade news, please let me just send this thing to you again. Feel free to buy the course for 27 bucks. But let's take a look at EuroCAD. So what would Ajax have done in the EuroCAD scenario? Remember, our rules state that we have to have, within the first 15 minutes, a reading of 70 or better. And we don't have that reading of 70 or better. We have a high of 64, we have a high of 50, 52, and then we have a closing value of 59. In the case where the RSI never goes to this power momentum extreme of 70, right? What do? Then we go into a secondary rule base, which says the following. Well, if the news reaction on this particular currency pair wasn't powerful enough to generate a 70 reading, then we don't have a trade yet. Then what we're looking for is for news for the currency to get to a 70 reading before we put on a trade. So in this particular case, the RSI ended up at 59, above 50. In order for us to be a buyer, according to Ajax rules, we need to have the RSI go up all the way up to 70. Now, what you see here is the RSI rises, but it never gets up to the value of 70. It kind of just peters out, right? And then the currency pair just kind of dies out and the price action just flattens out. The time limit on all Ajax trades is 4 hours from the start of the news. So in this particular case, it's a 10 o'clock piece of news, and by 1400 hours, we're done. If there's no trades triggered, all rules are, the setup just basically goes off the table. The MT4, disappears. There are no trades. So the great thing about Ajax that's kind of interesting is that it's not only a very, very good timing mechanism to get you into good trades, but it's a terrific filter to keep you out of what I would consider to be mediocre trades that do not have enough momentum for continuity, right? Now, Boyke is asking me, how do we come up with a name? Ajax is actually a term in poker, stands for aces jacks, which is one of the better hands that you can have in poker. Although somebody told me there's a better hand. My wife, who is a much better, I don't gamble, so I had no idea. But apparently, if you do aces kings, whatever, there's a better hand than aces jacks. But aces jacks considered to be a very, very good hand in poker. And we called the setup Ajax precisely because it puts the probabilities on your side. And this is a good example of how it puts the probabilities on your side. It gets you into good quality trades and keeps you out of mediocre trades like this one, which in this particular case obviously did not work, right? So one other aspect of Ajax that I need to tell you, and again, those of you who really want this, the full rules, download the course, is that not only does this particular structure trade news in its original direction. So let's say you have a positive reaction and it tries to trade it positively, right? It also trades news in a negative direction. So let's imagine, in this case, we don't have this. I don't have an example of this, but let's just imagine it. Let's imagine a situation where Eurocat rose high and then started to fall down. In other words, it reversed completely, right? According to Ajax rules, if we had a move above, and in this particular case, after 15 minutes, it ended above 50, we'd be looking for a buy point, right? But if the RSI started to slip down to below 36, if the momentum started to come down so low that it was going to be like 36 or lower, right? We would have actually been able to enter a short position. In this case, it did nothing. And this is a good example of where, no momentum really would have kept you out of bad trades. But imagine if this was a big sell-off. The RSI would have turned 36. We would have been able to get short over here, and then we would have been able to make money to the downside. The key thing that's very, very cool about Ajax is it's completely agnostic. It's not that it cares about the news. It's not that it tries to interpret the news. It's not that it tries to figure out if the news is genuinely good or genuinely bad. What it really does well is it trades the market's reaction to the news. It times that trade well, and it keeps you out of unnecessarily bad trades, right? So you saw how this works on what I would call a meaningful event. But it actually, I think, worked relatively well on what I would consider to be a relatively non-meaningful event, which is like Philly Fed. So let me, it's 4/17. I got confused because last week was obviously a holiday week, right? And it was Thursday was effectively a holiday, so I got confused. So basically, Friday was a holiday, so Thursday was basically the Friday. So Friday was an event where we had, in the U.S. session, Philly Fed. Now, U.S. data is obviously traded against either euro-dollar or dollar-yen, but in the case of what I would call second-tier data, you always want to trade it against dollar-yen. So at 10 o'clock in the morning, U.S. data was the Philly Fed number. And it was actually better than expected, right? So let me just zoom in a little bit here, and you guys can see how the Philly Fed number would have traded. So here's the 10 o'clock candle. The RSI is 62, right? Then it actually dips down. You have this kind of a correction. Then it dips back up to about 51, right? Our rules say we're not going to enter a trade until and unless it gets to 70. We want to see some serious momentum in order to believe that there is potential for upside in dollar yen post this news event, right? So what do? And we have 4 hours to make that happen. If it doesn't happen in 4 hours, we're just basically closing up shop. Well, it starts at 10 o'clock. Remember, 1400 hours is when we're going to close up shop. But at about 2 hours into the trade, dollar yen really picks up steam. And everybody can see this. Here's my window, right? The RSI reading goes to 102.33. 102.33 at 12:30 New York time, 2.5 hours after the Philly Fed number is released, right? We get long at 102.33. Our stop is 20 points. 102.13 is our stop, and our target is 102.43, right? And we get long over here, and it takes, I think, about, well, this is 42. It takes a little bit of a while. It actually doesn't hit till 43 till over here. Here's 45. It takes about an hour and a half, but it slowly but surely climbs up, and boom, hits us in. So you can see how, by being patient, by being rigorous, by being very logical, we're able to select another quality trade and bank about 10 more pips from the trade using this. I'm trying to remember if, and actually, again, I don't remember because I don't think I traded euro yen. I'm curious if the yen complex was tradable over here. And okay, so yes, it was. So, and this is yet another. This is another rule of Ajax. Now, you guys are going to say I'm absolutely crazy because there's so many complicated rules. The great thing about it is all of them have been coded. All of them are in MP4, so you don't have to think about all the rules. But the reason, again, why there's so much complexity in the rules is because you are trying to create a very, very robust algorithm, which is what we think we did. So euro yen is an example of where we have a counter trade move in on Thursday against the Philly Fed. What happens in euro yen? At 10 o'clock, the news comes out, and the reaction on the RSI is actually quite negative. At the 50-minute mark, the RSI is below the 50 mark, right? Below the 50 mark. It's a 37. When the RSI is when it's above the 50 mark, we need to have a reading of 70. When it's below the 50 mark, to the downside, we need to have a reading of 30 or less because we need to confirm to ourselves that there is downside momentum. But to the upside, we only need to have a reading of 64 or higher because our test of change in momentum is much more liberal. In other words, if the reaction to the news was negative and then suddenly it turned positive, we're much more likely. Remember, if the reaction kind of turns the other way, we want to join that reaction quicker because generally when the reaction is reversed to the news, it's a meaningful point, and we want to take advantage of it, right? So we're much more liberal with our entry criteria on the opposite side of the spectrum than on the initial side of the spectrum. So in this particular case, for us to get long, all we need to do is see the euro yen RSI reading go to 64 or better. In that case, the 64 print is over here, 65.10, right? 65.10 right over here, right? And the close is 141.48, right? And this is where I'm going to give you the classic Ajax rules and then the kind of rules that you can play around with yourself. If you want to simply use the classic rules of 20 stop, 10 target, then you would simply put it at 141.48, 141.28 stop, 141.58 target, and I think your target would have been. Well, you don't quite make target here. You actually don't make target. You get flat. It doesn't matter either way. You wouldn't have using spread here. If it's 48, because this is bid numbers, I don't think I would have made 50. You don't make 10 points, right? It's a good example. It doesn't matter whether you put a 20-point stop here or if you use the high volatility stop. You wouldn't have done either. But here's the key thing: the Ajax also has a rule that it closes out all trades at 1600 hours New York time, which is like around here, 1555, 1600 hours. When the New York market closes, it doesn't matter how long you've been in the trade, 10 hours, 5 minutes, whatever, you closed out flat. So you closed out flat over here, and you wouldn't have lost any money. Basically, you came in 148, it would have taken you out at 148. The trade just didn't work. But here's the thing. Let's review the trades that I've given you that we've traded last week. In the Canadian dollar, dollar CAD, Aussie CAD were both plus 10. Euro CAD was not a trade, so there was no trade, right? So you made 20 points there. Dollar yen was a plus 10 trade against Philly Fed on Thursday, and Euro yen was a break-even trade. So what you see here is a highly disciplined algo that no, by the way, this is all spread included. This is not we've tested this on spread included. So what you see here is a highly consistent algo that makes very steady but very, very effective 10, 20 pips. Those pips add up tremendously over a period of time. Those of you who need to appreciate just how much money you can make making a little bit of pippage, I ask you to read my column this week, which touches on this particular subject, how to make money in trading without any strategy at all. It's probably the single most important column I've ever written. And those of you who understand trading will appreciate, I'm sending this to you guys as a link. Those of you who understand trading will appreciate the power of what I say here. Those of you who don't, can ignore it at your own risk. But the point being is, this is the strategy. It employs very rigorous money management rules. It employs very, very strict entry criteria. It is a little bit complex, but its overall philosophy is relatively simple. I want to buy things on a retrace, or I want to sell reversals off of news events, which are the primary drivers of trade in the currency market. So now I'm going to open myself up to questions that you guys may have, and I will give you one last chance to buy the course, which is right over here. I'll send this link to you again. If the RSI is below 30, I do not go long. I go short. If the RSI is above 70, I go long. We're trading momentum unless we get a retrace, and then I'm trading it from different values. Is there anybody who is able to grasp this strategy in its principle? Just type in yes. I'm just curious. Okay. Everybody's saying they think so. Boyke says he gets it. Okay. All right. Any further questions, guys? Any questions you have for me on this particular strategy? We're going to be trading this in BK all month long in the month of May, trading it live on a variety of news events. So across multiple pairs. Yeah, Alexander is asking me, RSI up to 70, retrace to 64, back up above 64, then buy. Correct. That is correct, Alexander. That is one of many rules of this particular strategy, but that is the critical rule, yes. And so the same way, so on the sell side, it's RSI below 30, above 36, and then below 36, sell. Same kind of principle, but the other way around, yes. But again, those are just the beginning rules. If you guys want the full rules, just download the strategy and you'll be able to get all the rules of the strategy. Okay, I'll give it one more minute if there's any more questions. No? Okay. Well, thank you very much, guys, for attending. I hope you guys enjoyed this. I know this is going to be on record, so we can. I'll post the link again on my Twitter feed, so you guys can watch this again. Thank you very, very much, and I will see you guys next month. Everybody have a great day. Talk to you later.